This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices extended losses on Monday, falling more than 3% as escalating trade tensions between the United States and China stoked fears of a recession that would reduce demand for crude while OPEC Plus readies a supply increase. The Brent and WTI benchmarks both dropped to their lowest since April 2021. Brent futures lost $2.23, or 3.4%, to $63.35 a barrel by 09:03 GMT, and U.S. West Texas Intermediate crude futures were down $2.22, or 3.58%, at $59.77. Oil plunged by 7% on Friday as China ramped up tariffs on U.S. goods, escalating a trade war that has led investors to price in a higher probability of recession. Last week Brent and WTI lost 10.9% and 10.6% respectively.
Top OPEC Plus ministers stressed the need for full compliance with oil output targets and plans to compensate for pumping too much, after the group's surprise decision this week to raise output further helped send prices crashing to pandemic-level lows. Several ministers from the OPEC Plus, as the group is known, held an online joint ministerial monitoring committee meeting on Saturday. Record output in Kazakhstan has angered several other members of the group, including top producer Saudi Arabia, sources have told Reuters. OPEC Plus is urging the Central Asian country, among other members, to make further cuts to compensate for excess production.
Moving on to the top news in the energy sector.
Saudi Arabia, the world's top oil exporter, on Sunday slashed crude oil prices for Asian buyers in May to their lowest in 4 months, following a recent shock decision by the OPEC Plus oil group to speed up oil output hikes. State oil company Saudi Aramco cut the May official selling price for flagship Arab light crude by $2.30 to $1.20 a barrel above the average of Oman and Dubai prices, a pricing document from the producer showed. The drop marks the biggest decline in more than 2 years and is the second consecutive month Aramco has lowered its prices, Reuters' record of Saudi OSPs showed.
Dutch and British gas prices continued to fall on Monday morning as warmer temperatures and fears of a global trade war leading to weaker energy demand weighed on the market. The benchmark Dutch front-month contract was down €1.75 to €34.70 per megawatt-hour, MWH, or $11.19, MMBTU by 0817 GMT, LSEG data showed. The contract hit €33.65 per megawatt-hour earlier, its lowest level since September 2024. U.S. President Donald Trump's sweeping tariff plans hammered global financial markets on Monday after he warned foreign governments they would have to pay a lot of money to lift the levies that he called medicine. Next, we have the top news in metal markets. Base metal prices in China tumbled on Monday amid escalating trade war concerns and recession fears, while London metals flipped to a decline after rising on arbitrage trading. The most traded copper contract on the Shanghai Futures Exchange, SHFE, dropped 7.0% to 73,640 yuan per metric ton as of 0805 GMT, hovering near its lowest level in over 3 months since January 3. SHFE market was closed last Friday for a holiday. The retaliatory tariff makes us worry about trade war, which will impede economic growth globally, a metals trader said.
Gold prices held steady on Monday, bolstered by strong central bank demand and the potential for an early U.S. Federal Reserve rate cut, but gains were capped as some investors sold bullion to cover losses in other trades. Spot gold edged down by 0.2% to $3,029.04 an ounce, as of 0909 GMT, after hitting a session low of $2,971.09 earlier in the session. Major stock indexes across the world plunged as U.S. President Donald Trump showed no sign of backing away from his sweeping tariff plans. China struck back with a slew of countermeasures on Friday, including extra levies of 34% on all U.S. goods and export curbs on some rare earth metals.
We will now look at the top news in the agricultural sector.
Chicago soybean futures rose on Monday, supported by potential changes to U.S. biofuel policy and the weak dollar, after China's announcement of a 34% tariff on U.S. goods pushed soybean prices to their lowest this year in the previous session. The most active soybean contract on the Chicago Board of Trade was up 0.18% at $9.79 a bushel as of 0700 GMT. On Friday it fell to $9.70, its lowest since December. Last week, a U.S. biofuel coalition lobbied for higher federal biomass diesel blending mandates, potentially increasing the renewable volume obligation from 3.35 billion to as much as 5.75 billion gallons. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.